It doesn't matter if you hate Bitcoin. The world's biggest institutions have already decided it's an asset. And once you can borrow against something, the debate is over. At some point, every new asset goes through the same phase. First, it's ignored, then it's mocked, then it's attacked, and finally, it's absorbed. Bitcoin is no longer asking for permission because the world's biggest institutions have already answered the question. Let's strip this back to basics. An asset is not defined by government approval, popularity, or whether people like it. An asset is defined by one thing. Does the market treat it as a store of value and a bearer of economic weight? Gold became an asset because people treated it as one. Land became an asset because people defended it as one. And stocks became an asset because institutions structured finance around them. Assets aren't declared, they're recognised through use. And it's exactly what's happening with Bitcoin. Here's the line most people miss. Institutions don't speculate, they validate. Pension funds, asset managers, insurance companies, family offices, these entities don't put billions into something unless it fits inside risk models, custody frameworks, compliance structures, and long-term allocation strategies. When institutions buy Bitcoin, they're not chasing hype. They're acknowledging the durability. Institutions don't make statements, they make allocations. And now Bitcoin has allocations. And honestly, this is the most important part of the conversation. The moment an asset can be used as collateral, it graduates into the financial system permanently. Because collateral means banks recognise it, lenders price risk against it, credit is built on top of it, and leverage becomes possible. At that point, it doesn't matter if you believe in it. If you can borrow against it, it's real. Land is valuable because you can borrow against it. Stocks are powerful because you can borrow against them. Bonds are foundational because they are collateral. Once Bitcoin becomes widely accepted as collateral, it joins the same category. Not ideology, not theory, infrastructure. And people still argue about Bitcoin emotionally. But the world doesn't run on emotions, it runs on spreadsheets. On balance sheets, Bitcoin is increasingly treated as a non-sovereign asset, a hedge against currency debasement, a digital bearer instrument, and a long-duration store of value. Whether someone calls it digital gold, speculative, or dangerous is irrelevant. Assets don't need consensus, they need adoption, and Bitcoin has crossed that threshold. A common argument goes like this: Bitcoin is too volatile to be an asset, and that's historically false. Early equities were wildly volatile, emerging market currencies are volatile, commodities swing violently, and tech stocks collapse multiple times. Volatility doesn't disqualify an asset, it simply means the market is still pricing it in. Volatility is the price of discovery. As adoption increases, volatility compresses, and this has happened with every asset class in history. Bitcoin is just earlier in the curve. Once an asset is held by institutions, custodied professionally, regulated structurally, traded globally, and used as collateral, it doesn't go backwards. Even if the price crashes, even if sentiment turns, even if governments complain, because the financial plumbing is already built. You can't uninvent an asset once the system relies on it. Bitcoin is no longer outside the system, it's becoming part of it. You don't have to like Bitcoin, you don't have to own it, you don't even have to understand it. But once institutions treat it as an asset, once credit is built on top of it, once it sits on balance sheets alongside stocks, bonds, and real estate, the argument ends. Bitcoin doesn't need belief anymore, it has recognition.